Hello everyone, it's Wednesday, December 24. Today we will analyze the charts for the euro and the British pound to evaluate potential market movements. As you can see, the European currency extended its gains earlier in yesterday's session. The absence of significant statistics from the Eurozone allowed the euro-dollar pair to reach its one-month high, with a breakout occurring only during today's Asian trading hours. However, late trading yesterday saw both the euro and the British pound come under pressure, weighed down by the upwardly revised US GDP growth data. The US economy expanded by 4.3% in the third quarter, exceeding expectations of 3.2% and up from 3.8% in the second quarter. This strong data raised expectations for less aggressive rate cuts from the Federal Reserve, which in turn supported the dollar. In addition, traders received data on US industrial production for November, which surpassed consensus estimates. However, the US Consumer Confidence Index fell short of expectations, with a preliminary December reading coming in at 89.1. Initially, the dollar reacted with a slight increase, but soon faced renewed pressure, allowing risky assets, including the euro and the British pound, to continue their bullish momentum towards new one-month highs. Looking at today's macroeconomic calendar, it is largely empty aside from the weekly US initial jobs claims data, which is of little importance to market participants, especially with shortened trading sessions ahead of the Christmas holiday. As a result, market volatility is expected to be subdued. However, the bullish trend in risky assets remains intact, suggesting that any weakness in the dollar could lead to further gains for the euro and the British pound. Turning to technical analysis, the 1-hour EUR USD chart shows that a false breakout at 1.1807 could trigger a sell signal, pulling the euro down to 17.75. If the price breaks below this level, it would increase selling pressure, potentially driving the euro down to 17.54, with a possibility of reaching 1.1729. At this mark, I would recommend considering long positions on the rebound, targeting a 20-25 pip move. Since bullish momentum persists and the euro is still trading with a range, long entries at 17.54 and 17.75 could be interesting opportunities amid a correction. On the flip side, if the price breaks through and consolidates above 18.07, we could see the euro rise to 1.1840, with potential gains extended to 18.82. At this level, it would be prudent to consider short positions on the rebound, aiming for a 25-30 pip move. Short entries at 18.40 and 18.07 should only be considered following a false breakout. Regarding the British pound, it continues to trade upward. After a brief correction, buyers have returned to the market. A false breakout at 1.3508 would trigger a buy signal, allowing sterling to extend its bullish momentum toward 35.54 and potentially even climb to 35.90. At this level, it would be wise to consider short positions on the rebound, aiming for a move of 30-35 pips. Short entries at 35.54 against the trend should only be taken on a false breakout. If buying activity wanes and the price breaks through and holds below 35.08, a sell entry point would form, potentially pushing the British currency down to 1.3478. At this level, it would be worth considering long positions on a false breakout. Going long on a rebound would be relevant at 1.3447 with a target of 25-30 pips. Best of luck to everyone.